I mean, no one liked their bank, right? Zero people were like, wow, I love this banking product. Yeah. We ended up like actually gaining like 2 billion in deposits over that week. Older generations is like going like, wow, I don't know what to do. Whereas, we've kind of reset the playing field.
On this episode, I chat with Immad Akhund. Immad is the co-founder and CEO of Mercury, the fintech startup's use of banking and all their financial workflows. He co-founded Mercury 8 years ago, and today it serves over 300,000 customers and employs more than 1,300 people. Mercury recently raised a $200 million Series D at a $5.2 billion valuation. Here's my conversation with Mercury co-founder and CEO, Immad Akhund.
Thanks so much, Immad, for joining us. I want to start at the very beginning. You moved from Pakistan to the UK at 9. How big a change was that, and what did you take from it?
Oh, wow, really? Really going back to the original, huh, Jack? Yeah, I moved when I was 9. It was a difficult change. I didn't speak the language that well. I used to be like great at school, and then like suddenly it's like a different syllabus and everything's different. And so it was a struggle. It took a few years to really settle into my groove. What did I take from it? I mean, I think, it's hard to tell like what you get from different parts of life, right? I do think having that kind of like a setback and like, made me feel like, uh, I wasn't all that great. Like I had to work really hard to like get somewhere. And I think it's always kept me kind of humble. Like I feel like I always have to work hard, and maybe gave me like some resilience. Also, kind of forced me to make friends again and, make a new kind of social life. So I feel like I'm pretty good at making friends in new places, which I think was also helpful in my entrepreneurial journey. I do think the outsider perspective. So, I moved to the UK at the age of 9, then I moved from the UK to America at the age of 23. I do think the outsider perspective is quite useful as an entrepreneur. So, Mercury does obviously banking. And I think a lot of people in America were just like okay with the way the banking was. Like that's just the way they had always had it. But actually, even moving from the UK to America, in the UK when I moved in 2007, banks were a lot better than in America. Like even in 2007, we had like instant payments and like the mobile apps were pretty good and things like that. So when I moved, I was like, wow, I thought I'm moving to like, the Silicon Valley and like technology is going to be amazing here. But the banks were just like so painful to use. That outsider perspective like helped. So yeah, I've always felt like an outsider wherever I am because I've been, I guess, a double immigrant. But I think that is like part of like what like makes me has led me to be successful.
Super interesting. And before Mercury, you started Heyzap, right?
Yeah.
Maybe could you share a few reflections on what you learned from that experience, what it taught you, and the decision to sell to Fiverr?
Yeah. So Heyzap was my third company. I did one company in the UK called RevMap. And then I did another company called ClickBus, and then I did Heyzap for 8 years. So it's definitely most of my experience before. Uh, as an entrepreneur, you're always learning. And I think that's kind of one of the fun things about being an entrepreneur. Like you kind of, I didn't know anything about developer tools. And then I did 2 developer tools company. And then with Mercury, I'd never done a fintech or a banking startup. So I think that's like the fun of entrepreneurship. I really like learning new things. Yes, it's hard to go like 8 years of life. Like, what were the biggest lessons? I'll give you like a couple that like struck with me. Number one, building something for yourself is much better than building something for like an imagined customer. So I think that's part of the reason Mercury is successful, that I really wanted to build this product for myself, and I knew exactly what to build. Whereas a Heyzap, I was building products for like, game developers, and I wasn't really a game developer myself. I mean, I was an engineer, but like I had to kind of, it took us a long time to find product market fit, like basically 6 years of like trying different things. And I think if I was building for myself, it would have been easier to like get there. And then let's see another one. I think culture at a company is really important. And at Heyzap, I didn't really know what culture was. At Mercury, we've been very deliberate about setting up a culture that like I think is really strong and is scalable. So uh, I think culture is like kind of like the personalities you have and the people, the types of personality that you can encourage. So we look for like curious, product minded people that are kind of humble and really helpful. That's not the only way you need to build that's not the only way to build a culture for a company, but that's the culture that we've built, and I really like that, and I think we work really well together because we have that kind of cohesive culture.
Yeah, it's super interesting because one thing it stuck out, I guess, what you said is that you're building a company for yourself, and I guess a lot of what we hear is that you have to try find a product market fit before you launch your
Yeah.
product. Like, how specifically did the idea from Mercury come about? You said you were building it for yourself. What was it about your personal experience that you realized there was something kind of fundamentally
Yeah.
broken about the way that banking was being done for startups?
Um, so I'm an active investor as well, and I often find that one of the problems sometimes for people who are like straight out of uni is when they haven't had that much experience in life in terms of like, especially like at companies and things like that. So when they build a product for themselves, they always end up building like something that makes sense at like university, but doesn't make sense like in the broader world sometimes. So yeah, that can be like a double-edged sword, like building it for yourself. Uh, but so your question was like, how do you hunt for product market fit? Is that kind of your
It
question?
was more like you kind of articulated a different argument that you were looking for a product to kind of fix something in your own life, right? What I gathered from what you were saying is you had this experience through Heyzap, and that made you realize that there was something kind of fundamentally flawed about the way that startup banking was being done that made you want to build a product for yourself that then obviously had this kind of broader appeal to other
Yeah.
startups as well.
So what was the problem that I noticed?
Yeah,
So I
yeah,
think
exactly.
I mean, no one liked their bank, right? Zero people were like, wow, I love this banking product. And, people just were okay with that. They were just like expected that. And it was like, okay. But I looked at it and I was like, why should we using this product as like a core part of your entrepreneurial journey that everyone hates? And it's a combination of things people hate, right? It's like, there's always weird fees. Like I had this like monthly fee that I would get, and I'd have to like call them up and say, hey, can you like cancel this fee? Remember, you're not supposed to charge it for me, and they'd cancel it and then come back like a few months later. So there's always these like very customer unfriendly kind of practices. And then the product would never improve. So, there was this feeling that there's this kind of fixed product, right? Like you get a checking account and that's it. But like, we literally had to have people kind of log into the bank every single day and like copy paste the number of like whenever someone paid us, we had to make sure our system knew
Yeah.
that someone had paid us. And it was completely ridiculous. In the end of the month, we had to like send out a bunch of payments. So it would take 3 days, and again manually like copy pasting each payment. So yeah, no API. So yeah, these kind of static products that never improved. And then it was still very based on like either you had to know someone and they might get you a bank account, or you had to like physically walk to a bank branch to get a bank account, which I thought was ridiculous. So it was a series of those kinds of things where people just like took things for like this is the way it is, but like I just didn't see why it had to be the way it is. And actually in the UK and Europe, there'd been a bunch of neobanks that had like kind of carved the path by the time I started Mercury in 2017. But yeah, 2017 was very early to US neobanking. There was almost we were the first to have a wire and like actual real website for like business banking online. So we were very early to it, but there was I also thought like if it works in Europe, there's just no way it wouldn't work in America.
Yeah, and one of the things, I guess you mentioned the flaws of the traditional banking system. I guess one of the advantages, though, is that they're implicitly underwritten by the government, right? Like kind of the idea of too big to fail. And so we'll come to Silicon Valley Bank later on. But how did you build that trust in the product early on? Was it through your network of founders that you knew, or like, how did you get on board people when you first
Yeah.
launched Mercury?
I mean, I would say even today, trust is like the reason everyone doesn't use Mercury. Probably like we're clearly a better product, so the only reason not to use us is like trust. I mean, there's some other factors as well, but trust is a really big factor. So when we first started, as soon as someone raised more than $2 million, they would move off Mercury because they'd be like, oh my god, I can't trust like $4 million to sit at like a startup neobank. Now the level is above 200 million. Like we have several customers with more than 500 million on Mercury. But it took a long time to kind of work up there. So, how you get trust, I don't know if there's a magic answer. We did a bunch of things that tried to do it. So, number one, especially at the start, you have to get trust through association. So we had Andreessen Horowitz as an investor. We actually had 60 other seed investors in our early round. And those people had portfolios and a brand. And to some extent, you kind of borrow some of the trust that they have. I actually used to do podcasts with other VCs. So I was like, okay, like I don't have Sequoia as an investor, but let's have Sequoia on a podcast. And then their portfolio companies would be like, okay, if my VC is talking to Immad, then like potentially like that he's a trustworthy person. You do, we worked with partner banks that were regulated institutions, and they had FDIC insurance, and FDIC insurance does give a lot of trust to people to they feel like the deposits are somewhere safe, and we tried to make it clear that and we did that a lot. Like the money would never touch Mercury, and today the money never touches Mercury. It goes straight to these kind of FDIC insured institutions, and then especially over the SVB period, we actually extended the FDIC insurance quite a bit. So the pre-SVB accounts had 1 million per customer, and now they have 5 million or more. So that goes a long way. There's an equivalent in the UK as well. I can't remember. I guess FCA insurance or something. But yeah, deposit insurance definitely helps on the trust side. And then, we always try to have like a very kind of, even though we're a startup, we try to have like a grown up kind of brand. Like I think Mercury is a good name. We got the .com relatively quickly, and we tried to behave like, what you would want like someone trustworthy to behave like, right? Like we try to be really honest with our customers, and we treated them well. We invested a lot in customer support, so most of our customer support is still in-house. So every interaction people have with us like is like a little bit of like place where we either lose trust or gain trust, and you have to kind of think about that very actively.
Totally. And you touched a bit on the model. Mercury isn't a bank in the traditional sense, right? Like a normal bank will take deposits, lend them out, and earn the spread or the net interest income. You've mentioned that the deposit sits at the partner banks, and you've built kind of a platform around that. So walk us through how Mercury makes money.
Yeah. So in the US, it is pretty hard to get a bank charter. And the main way that fintechs kind of get to market in the US is they partner with these kind of sponsor banks. And that's what we did. So we work with 2 sponsor banks, and again, customer deposits sit with our sponsor banks. They do give us like a rev share on those deposits, which is one big way we make money. We also get issue cards, and every time there's a swipe, there's an interchange fee where we get some money from that. And then we also make money on FX. And we also have a subscription kind of product that we charge for. In the UK and Europe, it is a little easier to get like kind of a startup bank license or e-money license. So that's the way kind of fintechs go there. We actually did apply for a bank charter, so we have a conditional approval. So we will be a bank soon. But in the US, it's like you kind of need to hit like a certain scale before you go for that, I think.
And of the streams that you mentioned, like the float, the spread of deposits, is that the primary engine? And if so, does that make you kind of beholden to interest rates in the VC funding environment?
Yeah, that's definitely like it's not the only way. We're fairly diversified at this point. And so interest rates can go up or down. So, actually we mostly grew up in the zero interest rate environment and weren't making much money on interest rates. And we make plenty of money on kind of interchange and FX and all of these other things. But yeah, we did end up making more money when interest rates went up than they went down again. So, we try to build the business actually around it. So we kind of assume interest rates are actually pretty low, and we pretend they stay at that low level, and we build the business to be profitable even at like lower interest rates than today. And then we do some hedging as well. So even if interest rates do go down, we have kind of this is getting a little bit too technical, but we do have like a interest rate collar. So if interest rates go below a certain point, we get paid out. If they go above a certain point, we pay out to the collar. But that's a nice way to have like kind of a costless hedge against kind of interest rate fluctuations.
Totally. And I guess we just talked more about the deposit economics on that side, but you sort of spoke about the value that you have a lot to your customers in terms of the actual platform you've built and how much kind of better it is than the existing banking system. Long term, how do you value the software franchise specifically? Is a long-term bet that Mercury gets valued less like a bank and more like the financial operating system founders run their companies on?
I don't really care that much about like how we get valued. I feel like what I care about is like I know this is going to sound a little cheesy, but I care about just like doing good stuff for customers and like people will value you how they value you, like, and like building a long-term business. We are kind of doing a lot of things that people won't expect. So yeah, we launched invoicing and bill pay. We actually made a payroll acquisition, so we're going to enter into payroll. And like the vision we have there is that the first tool you need to run your business is bank. Right, you need a bank account to like get your first check and to pay your employees and things like that. And it doesn't make sense to then have to go sign up to a bunch of other things just to like keep doing things with your money. So we're really consolidating a lot of them within Mercury, and all of them. Well, many of them come with their natural ways of monetizing. So obviously, payroll is a big market, uh, and invoicing is also another big market. So we're entering those spaces. I think we've been kind of thinking a lot about AI and how does that play into like running a business. And actually, a lot of things that you do with Mercury are like very they're great for AI, right? Like you receive an invoice and you have to pay it. So we already have it. So you can kind of forward the invoice to Mercury and it'll automatically kind of scan it and set it all up. But I think we can go a lot further, right? So you even before you receive the invoice, like if Mercury was kind of CC'd and it was like it's like, hey, if there's any questions you have about getting paid, just like ask Mercury kind of thing. And we take care of like collecting all the information, collecting invoices, paying them on time. And that's just for like AP, but you can do something similar for AR and like all the other functions of the business. So I really think about it much more as like, how do we do great things for customers and build a great business, and we'll get valued however we would get valued.
And you mentioned that you recently received conditional approval from the OCC to establish Mercury Bank. Can you maybe speak to the importance of this and what the market opportunity that opens up is?
Yeah, I mean, I thought we would always get a bank charter. It was kind of part of the original plan. It's in my seed deck that we'd get it. I think in the seed deck it said as soon as we hit like $1 billion in deposits, we'll go for it. But we've definitely like it's taken longer, but it was always part of the plan. I think like it delivers a better customer product. It's just hard to. Yeah, bank sponsors are great and we work with them, but obviously we're like one partner of many for them. They have their own plan and priorities, and we can't dictate their roadmap. Uh, and there's some things that are just actually really hard to do as a fintech. Like there's a payment rail in the US called Zelle, which you can't get access to, but it's a very popular payment rail. It's hard to do real lending at scale, especially for like actually the most standard kind of lending products like credit cards, mortgages. It's hard to do those things as a fintech. So we'll be able to do a lot more for our customers. That's the biggest reason to do it. I'd also say, it's always been part of the plan. And I think we, given the scale we're at, like being directly regulated and having that kind of conversation directly with regulators makes sense. And so we're excited about it. And we're kind of doing it, but it's also a lot of work. Like it definitely didn't make sense when we were small. Now we have 1,300 people, and like we literally hired like around 100-ish people dedicated to getting this bank
Wow.
live and like
Yeah.
fully kind of running it after it's live.
You mentioned like how it will kind of enhance the customer experiences. Is there any products that you think, that you would want to bring out when you get this bank approval, and like how do you think that actually specifically enhance the customer experience?
Yeah, I mean, I talked about Zelle. I don't know if you're familiar with it. It's like a kind of
Yeah.
P2P payment system in the US. So we'll have that. There's lots of like little things, especially for bigger companies. There's like this thing called letters of credit that are hard to do right now. Anyway,
Mm.
there's like a whole plethora of like kind of, niche-ish things that are hard to do right now that we'll be able to do for our bigger customers. And then lending is like another big one. We've
Yeah.
actually generally avoided lending so far. We do some stuff, but very minimal. But, over the kind of first 3 years of being a bank, I think the plan is to have like 9-ish lending products. So we'll be a much, we still won't do, it won't be a ton of our revenue, but we'll do a lot more there. And I think customers will really appreciate that.
And do you think there's any challenges of becoming a bank? Two come to mind for me. I think firstly, if you're a chartered bank, you have to hold regulatory capital in maybe a way a fintech doesn't. And that's kind of a shift from a more capital light business that you run with the software offering that you have now. And the second is the credit risk that when you're lending, you mentioned that lending is obviously something that will open up when you get the charter. You're lending to startups which maybe fail at a higher rate than normal businesses. So how do you think about those two challenges, like maybe a more capital intensive model and secondly, the credit risk?
Um, those two are like almost the same challenge, actually, if you think about it. So even as a bank, yeah, the deposits we have under management, we're not going to be lending all of them out, and we'll still be sweeping them to kind of a network of partner banks. So you actually only need to hold capital against the deposits you lend out, and that's much more of like a math equation. Like you're holding a certain amount of capital, it's generating you a certain amount of revenue, and you're like we're only choosing to lend out because we think it'll generate revenue, and we're only holding capital in order to lend out because it's going to generate revenue. So it's much more, it's not like something where you're like you do it because you're forced to do it. You do it because you want to make revenue from the lending, and therefore you
Totally.
need more
Yeah.
capital against it. So that's one aspect of it. And then same with the credit risk, right? Like we're probably not going to be lending to like unprofitable high risk startups. That is
Yeah.
actually like a smallish percentage of our customers today. It used to be almost all of our customers like 4 years ago. Today it's less than 25% of our customers are kind of even in the startup category. 75% are like kind of a broader SME, as they call it in the UK segment. So, and even within that, like we have 300,000 customers. Vast majority of them you should not lend to. But yeah, some percentage of them have like really strong businesses, but they have inventory needs, or they're like opening a new factory or shop or whatever, and they want to borrow money against that. And there's plenty of like really good businesses that like need capital to grow, and that's where we'll be focusing kind of the lending. So yeah, lots of opportunities within that to be like actually fairly selective and only lend to things that we think are credit worthy, that other banks might do it if we don't do it, right? Like it's our customers, and actually
Yeah.
like they have to go to other banks, and they sometimes have to leave Mercury because we don't have those lending options to them. So that's how we think about it. It's not like we're not going to be going out there with like trying to win that many people with loans. We're actually going to be
Yeah.
mostly serving our existing customers and finding the ones that are most credit worthy and like lending out to them.
And presumably you're like in a much better place to underwrite startups, right? Because you bank specifically to them, you understand their needs, you've had, 10 years of working with them.
Yeah, and we have all this information, right? Like we have even more information that a normal bank account might have, right? Like if you use us for your credit card and your bill pay and invoicing, we actually understand a ton about your business just with that basic kind of data set. So yeah, there's definitely like a ton we can do on the underwriting side to actually be more creative and understand these businesses better.
We spent a bit of time on the opportunities and the risks that come with becoming a bank. But there was a moment when the risk wasn't hypothetical. Take us back to when SVB collapsed. Mercury was in a unique position. Your customers are probably a little bit worried. Their money was at risk. Walk us through what that period was like from the inside, and how did you act, and what did you learn from that experience?
Yeah, SVB was our main competitor, and obviously, again, in my slide deck, it was like SVB, and at that point when I started, I think it was like $20 billion company, and over COVID, it actually peaked at a $40 billion company, and it was a 20th biggest bank in the US. So it was a serious company, and it definitely felt like something that would last forever, right? Like it's like a big gorilla in the space. We when when the kind of worries around it started, we were the main alternative, and obviously we being a startup and being the kind of an online focused bank, we could react very quickly to the situation. So people really looking to sign up really quickly to Mercury, and or some of them already had accounts and they wanted to move money over. So we really focused on like making sure that they could have a really smooth experience and like sign up very easily and move money if they wanted to. But there was also this question of like, if SVB is not safe, why would Mercury be safe, right? Like, and that's the question that people were asking me. And I really wanted to like not just say like, hey, it's good, like don't worry about it, right? Like I wanted to give people like a real answer to that. So we actually, what I would say to them is like, hey, we have this extra FDIC insurance, so you have 1 million FDIC insurance, and then we also have this product called Mercury Treasury, so you can put money in US government T-bill mutual funds, and it's like all in your name. But so I was saying this story to them every time they asked me that question, which was a very reasonable question. So we actually, over that weekend when SVB was sailing, we kind of built a product around that where we would visualize your money. And we also kind of worked with our partner banks to extend the FDIC insurance from 1 million to 5 million over that week. So we kind of built this product that would like really speak to people and say like, okay, this is where your money is exactly. And like, if you have too much money to be fully covered by FDIC insurance, like let's get you set up on Treasury and this is how you do that. And, but that really, building that product, speaking to them in a way that they could really like have it explained. And like, this is the banking industry. Like no one builds products to start off with, but to build like this kind of visualization over like a weekend was like unheard of. But I think people really appreciated that we were kind of stepping up and like, not being condescending about it, but like really answering their questions and their worries. And we tried to be really like open and respectful about it. Like, some people, we ended up like actually gaining like 2 billion in deposits over that week. But some people left us too. And that was understandable as well. And we made it easy for them to leave if they wanted to leave. But the big change for us was really, obviously we had this kind of big increase in users and deposits in that week. But even 2 months later, we were growing at 80% faster than we were pre-SVB. So it was kind of an inflection point. Like a lot more people kind of learned about us, but also a lot less people were choosing SVB and they were choosing Mercury as their kind of primary banking relationship. And it's kind of continued since then.
Kind of counterintuitively, it was a tailwind for you guys, it sounds like, rather than just everyone kind of worrying about startup banks and then just kind of going to like JP Morgan or something like that. So you said basically it was a net positive for you guys.
Oh yeah, definitely. And I think like actually, this is, probably shouldn't say this on on a podcast, but have you watched Game of Thrones?
Yeah.
Yeah, there's Lord Baelish says like chaos is my opportunity or something like that. But I really think for startups, is that the phrase he says? He says something like that. It's a pretty good phrase.
I'll have to double check that after this.
I think for startups, right, like the benefit of, there's lots of disadvantages to a startup, right? Like you generally have less resources, your brand is less known. It's often harder to recruit as whatever, right? Like you could list out all these disadvantages, but the big power of a startup is like how quick you can be and how much you can react to the situation. And you can do that very quickly at a startup because like, you have less to lose, you have a nimble team, everyone's like used to change. So I think like often when things are going like, not great in the market or like there's disturbances, like actually like there's a time where a startup that's like executing well can shine. And the other thing I would add is like a good startup is trying to paint a picture of the future, right? Like what you're really trying to say in a startup is like, what I believe will exist in 10 years time and like it will be inevitable in 10 years time. But if you're going to be inevitable in a 10 years time, like whatever changes in the market, it tends to accelerate the future. So like, this SVB situation obviously accelerated Mercury, but also COVID accelerated Mercury. There was a moment where like all the bank branches were shut down, and the only way to get a bank account was like to come to Mercury. And yeah, so I've found that every year something crazy has happened. Not every year, like from 2020 to 2024, it seemed like every year.
Yeah.
But most things, like if you're on the right side of history, it can actually like help you rather than hinder you.
And it sounds like from what you're saying that you require in yourself as well, and also your team, this adaptability and this ability to kind of very quickly respond to changing environments. So maybe can you share some of the things that you look for in the people that you hire? And now that you're at 1,300 people, how do you maintain that culture as you've scaled?
Yeah. So I touched on this a little earlier. I think curiosity is a really important attribute. If you think about like systems, like they exist in the way they exist, right? Like there's certain things required you have to go into a bank branch to sign up for a bank account. And like, often whatever the system that exists is like kind of seen as a given to people in the industry, that it's like, oh, it is the way it is. But I think curious people will go like, look at a system and say, oh, why is it like this? And like, really going like a step further. And sometimes the why is a reasonable reason, right? Like you're like, oh yeah, of course it has to be like this. But often the why is just like, actually it's always been like that and no one's really questioned it. And by understanding the why, you can be like creative and thoughtful. And I think curiosity is like such a great kind of superpower. If you have it, like I think the world is a lot more interesting, and and I think you can end up building better products and better businesses and better solutions to things. So that's a big one that we look for, like curious kind of people that want to learn and want to see change because of that curiosity. And then this other one is kind of like humble, low ego people. Maybe it's my Britishness to some extent, but like I find it hard, and people like kind of showing off too much, and like I really much prefer people to just be like, yeah, just like, not be too deprecating, obviously, but like just talk about it like in a real way. And like, yeah, actually ties into the curiosity. I think if you're like very high ego and you think you know all the answers, then you're not like very curious about the world. Whereas like, I think anyone at Mercury can have a great idea, and I would want any of our leaders at Mercury to also think that anyone at Mercury can have a great idea and be really open to that. Um, so that's another big one that we look for. Yeah. And then there's, when you have these kind of attributes, you're looking for them, then you have to kind of devise ways in the interview process to like really screen for them. So you have to be really active about that. And then when you have people at the company, like how do you, everyone has a bit of everything in them, obviously. So how do you encourage those kind of positive attributes? So we try to think about that like very actively in both the interview process and when someone's at Mercury.
We've heard from a lot of founders that curiosity is one of the ones that they really look for, and humility as well. I want to turn to the other side of the table. You're in a pretty unique position. You bank hundreds of thousands of startups, and you see company formation in a close way that most investors never do. And you've also been, as you said, an active angel investor for many years. So when you look across your investments, are there any attributes that the most successful founders and companies that you've backed tended to share?
I mean, it's hard to not be cliched with this. Like, I think the most important one is resilience. By far, I would say, like, you know, it's just hard doing startups, right? Like it's not a fun job. Even when things are going well, it's not a fun job. Like, but yeah, some people, I don't know, maybe you can train it or whatever, but some people are just willing to like just wake up every day and keep grinding and keep doing the thing, and even when it's hard, like not stopping and not giving up. Or like when there's a major setback, like just waking up again and continuing to do it. And I think that's like by far the most important attribute, and also kind of a hard one to judge. Like it's hard to, as an investor, to like meet someone and say like, oh, this person. Sometimes you can tell based on like their previous actions and previous startups or some things like that, but you can't always tell. I actually think this is like why second-time entrepreneurs are like do so well and are often looked for, is that like, if you're willing to be kind of hit in the face over and over and then come back and do another startup, then that's like shows like a level of resilience that like most people don't have. So that's a big one. I think the other one that I look for, which isn't like necessarily like a founder attribute, is like how big could the market be? Which isn't always like how big is it today, but like is this something that could really be huge? And nowadays valuations, even at the stages I invested at, like seed rounds, are like pretty high, like they're 20, 30 million. Um, and you're kind of making a promise that like you can build like a 1 billion, even 1 billion, maybe 3 billion is like kind of the minimum size of a company for it to like make sense to invest at such an early stage at such a high valuation. It's like the probability of success is low, so the number better be like pretty high at the end of it, given the valuation. So you really have to believe in this kind of large market at the end of the road. And like, to get to such a large market, like it really is like the future has to like really look like exactly how you think, and that has to be like a very big market at the end of it. Which some things are like very obviously big markets, but sometimes you kind of talk to the person, you're like, good idea, but like I just don't see how it could make like that much money.
Totally. And any of those sort of big markets that you're particularly excited about at the moment or like investing in? AI maybe, is that one that you're looking at a lot? Or?
I mean, AI is the market, obviously, but even within AI, like the market goes in phases. So I would say like right now, a big market within AI, and honestly, in like even 3 months, it might be done, and we're talking about another market. But the big one right now is agents and like infrastructure for agents, thinking about different places where agents can work, and like what verticals like are underserved by kind of the generic models. So that's by far like the biggest space that everyone's kind of looking at. I try to do some stuff in kind of deeper tech. So I've done a bunch of things in like space tech, and some in nuclear. And to some extent, like I think because AI is like a little bit over invested, it's actually sometimes hard to find unique new ideas in it. Like, you come across an idea, you're like, wow, there's like 10 people doing this. But yeah, hard tech is still actually like pretty hard, and there's like much fewer people doing interesting things there.
And you've been on, I guess, the other side of this. Obviously, you recently raised 200 million Series D at a 5.2 billion valuation. What influenced you to do the latest round, and how do you decide which investors to partner with for that?
Yeah. I mean, so yeah, the latest round, and actually the round before, was much more opportunistic. We've been profitable for the last kind of 4 years. So, most people, and most of the times I've had to raise, it's been like, either I raise or I die, which is like a very, very different equation to like being kind of opportunistic about it. So yeah, for us, it was a combination of like, hey, we made a bunch of progress and we wanted to kind of get a higher valuation mark, which is obviously useful for hiring and marketing and uh, acquisitions and things like that. And then we wanted to get like other good kind of VCs on board. So this round was led by TCV. Our previous round was led by Sequoia. Both really kind of strong investors. And yeah, in terms of what I look for in investors, it's often, I mean, it changes based on the stage of the company and like what you're kind of looking to do next. But yeah, at the end of the day, like I really want people who like really get the problem, that are really kind of entrepreneur centric, uh, that are like just nice people. I think it's actually goes a long way to like work with just nice people and enjoy working with them.
Totally.
There's some entrepreneurs that have like a very contentious relationship with their board and investors, and I wouldn't want to build a company like that. Uh, and yeah, I mean, there's obviously unique kind of stages to each company. So, the people that you want at an earlier stage are going to be different from people you want like pre-IPO.
Sure.
We're obviously like pretty at scale now. So, TCV is a crossover investor, which I think is nice because they understand the public markets as well as kind of late stage and growth private markets. And they've also kind of invested in this category quite a bit.
How are you thinking about like a potential IPO? What's the next stage, would you say, in that aspect?
Uh, yeah, we're still like a relatively young company. We only launched 8 years ago, and we're profitable. So there's definitely no rush. I do want to build a public company. It's like kind of the last bit of entrepreneurship I've never done. But I also think it's like healthy and it'll be good for kind of Mercury customers to have access to Mercury as an investment. So at some point, right now we're really busy with kind of getting the bank charter live and kind of, doing a bunch of other things. So definitely not for the next few years, but yeah, not like 10 years away. So that's kind of like the rough timeline. But we'll see, we'll see where we are at in like kind of 3 years time and where the market's at and consider options.
Absolutely. And you've spoken about your decision to raise, and part of that, I guess, capital will be funding the next phase of agentic finance and AI. You've shipped AI tools. You're working on Command, Mercury Insights, and developer tools. Maybe can you speak to a couple of these, what they do, and how you think they'll enhance the customer experience as you roll them out?
Yeah, we kind of think about like AI. I guess there's like two kind of strategies to it, right? There's one is, if you're using the Mercury app or the Mercury uh, website, like how is your experience going to enhance with AI? And there's lots of little ways we do that. Like we'll categorize all your transactions, we'll scan your invoices and all that stuff. And then we also have kind of Command, which is kind of our agent where you can ask questions, have it do things for you, like workflows, like, help you send a wire, or like look at all my transactions and tell me, how much money I'm going to have next month kind of thing. So you can ask kind of, pretty sophisticated questions and it puts together all the data that we have on you to answer them. So that's one big thing, and we're continuing to invest in that. And again, I talked about kind of expanding that to make it so it's available for email and Slack and like all of these things. Then there are definitely like some people that are really running like very AI native businesses. So there's people who wake up in the morning and they're like Codex or Cloud Code or Cowork, and they have all their tools connected inside there. And we have both an MCP and a CLI to help those people to make it so they can easily access all the Mercury utility and like connect it with all the other tools within AI. Yeah, at least right now that's not everyone. But I think it's like a really interesting category. There's a lot more people. Like we were just talking to someone who've got like, they have a job and they have like 10 businesses they're running on the side, and they're all
Wow.
actually making a reasonable amount of money, but they're all run by AI. And like, this, I think that's going to be actually like a big category in entrepreneurship. People running like actually pretty big businesses, which like previously would have taken like, several employees to run, but they're just using AI to kind of run a lot of it. And we would like to support those entrepreneurs for sure.
Great. And a couple questions to round off the discussion. Looking back over your journey at Mercury, is there a decision that you got wrong or something you do differently if you were starting again?
People often ask me this question, and I'm always like, things kind of worked out pretty well. So I don't know.
Totally.
It's like if I had a time machine, like I don't know if I'd want to screw up this present by like trying
Yeah.
to mess with the past. One thing that's like obviously something we did wrong, but I don't know if like it really mattered at the end of the day. We at least I regretted this decision for a while, but in hindsight, maybe it doesn't matter. But we could have launched a corporate credit card much earlier. We started with banking, and when we first started, banking and credit card was like a very different space. Like no one would say, well, yeah, obviously your business bank also needs a corporate credit card. Uh, and so we actually we could have probably launched it in 2021. We kind of stalled on it. We might have even done it in 2020. And then by stalling on it, kind of gave a lot more space for kind of Ramp and Brex to grow. So we eventually did launch it in 2023, and it's done really well. But there was definitely a moment where, I don't know how much it matters, but we lost like two years on that product, and we gave a lot more space to kind of people who ended up kind of competing with us. But even if I look back at our strategy of like why did we not launch it, like it's hard to say we were wrong either. So who knows?
Yeah. And you're in a position now where you've met a lot of founders and investors over the years. Is there a person that you've met who you think's taught you the most about building companies, and what's the lesson that stuck most with you from them?
I mean, probably Paul Graham. My second and third startup were funded by him. He's got these amazing essays that are still, I think, like timeless. One thing that I really like about Paul is like he really believes in, I felt like when I first met him, how old was I, like 23 or something? And, especially this is 2007. So, there'd never been like a real successful Y Combinator company. Like the best had been like a $10 million acquisition that Reddit had. But he would really like talk, like he would be like, hey, you guys can build a unicorn, a $1 billion company. And I remember thinking like, wow, like what is he talking about? Like it really did not seem believable, but he really believed in it. And he would like, he would paint this picture for people where he would like take their idea and like, oh, what if you did this? And what if this happened? And this would be huge in this way. And it was really like inspiring and like really like, and he was like very genuine about it. Like he wasn't like kind of, he wasn't like just making it up. He really believed that like we could do it. And he was right. Like, I had in that Y Combinator batch, we had Dropbox, and went on to make a $8 billion company. But it was like it was a bit kind of especially when you're new to Silicon Valley and like in London, like no one, especially in 2007, but like no one was like, wow, you can be young and build like a $1 billion company. It was like it was like I had started as an entrepreneur. I was like, wow, imagine if I sold this thing for 5 million one day, right? That was my mindset. I was like, that would have been insane. So like having someone that like really believed that it was possible. For me, but for everyone there, it's like that was like kind of his superpower, I think.
So it's nice to have someone out there who is genuinely believes in you and is like encouraging. So I think that's like wonderful that you had that. But yeah, I think most of our listeners are similar to me, where we're close to graduating or have graduated, and we're looking at the world and really excited about AI's the opportunities it presents, but also concerned about the potential for displacement. So in that context, is there any advice that you would have that you would like to leave the audience with that maybe they should think about?
Yeah. I mean, I think it actually goes back to my point about like how, startups can rise to like can work with chaos and like become better with chaos. I think actually like as an individual, you should also think about that, right? Like this is it's a huge kind of displacement, but also that's good. In like, when things are static, like a 40-year-old always has an advantage over someone kind of coming straight out of university. But when things are this dynamic, right, like everyone in the older generations is like going like, wow, I don't know what to do. Whereas like, we've kind of reset the playing field. So just imagine a world where like the playing field is reset and like everyone has to learn everything again. But you have the advantage that like, you don't have any patterns. You have time to learn things. So I think it's a huge opportunity. And like we see, I know this sounds like a little bit like maybe too optimistic or hyperbolic or something, but I see that, I'm investing a lot, and like the entrepreneurs I invest in today are younger than 3 years ago, right? Like there was for a while, like actually like people were getting older because like the world was fairly static, and the benefit
Yeah.
of experience and like industry contacts and all of this was like really important. Now, like, anyone coming out of university that's like done 2 years of like, being deep in like Codex or AI or whatever it is, has like probably more experience than like anyone else in AI, right? Because like everything's reset. And actually, I had this experience when I first started Mercury that I thought, oh my God, like how am I going to learn everything about fintech and neobanking? But it turned out that like no one knew anything about it because it was all so new. That once I spent like 2 years doing it, I was at the edge of like, what was, or even like 6 months doing it. Like the like business neobanking and all the stuff was like so new into 2017 that like you could, if you just dedicated yourself to it for like a year, you could be near the edge of knowledge. So I think this is true for like a lot of these categories. Like, how many people really know how to build agents, right? Like it's not that many people.
Yeah.
So you can get to the edge of knowledge very quickly. But what it does require is like a ton of agency. Like you have to kind of go out there and like do the work. And like most people, I find like the thing that they lack is agency more than like experience. Like if you're
Totally.
really hungry and you go, hopefully the people listening to this podcast are like already showing some agency because they're listening.
Yeah.
But there's so much knowledge out there. Like knowledge is infinite right now. You can get get it on YouTube or like ChatGPT or whatever. Like you can learn anything now. So the only thing stopping you is like kind of getting out there and like doing it and willing to like work hard at it.
No, it's awesome to hear from someone who's obviously deeply involved in the space, that the opportunity set is huge, and that it's really up to us as young people to take that and run with it. So yeah, thank you so much for your time, and really, really appreciate it.
Yeah, this was fun, Jack. Hope the audience liked it, and talk soon.